Alright, welcome back ladies and gentlemen to my channel here, Red Dragon 83. We will do before Asia, after our into Sydney, and we will analyze what happened this morning and in the PM, New York AM and New York PM on Bitcoin. So we had the Asia session from last night, right? It came down, we talked about this in the last video if you want to look at it, but basically what happened is Asia session came up here, came into Frankfurt, into London, we didn't took Asia high or Asia low, right? In London, we dropped down into London lunch or London tea time. This is all New York time, right? You have to know the sessions. You can learn the sessions by going through ICT stuff, the market sessions or usual market sessions and everything, right? So London opened. London took its opening high, took it out, and then made a move down into Asia 50%. And we were so the accumulation, one drop down, kind of like a spring, taking out the liquidity down here. And then during London lunch or tea time, into pre-market, into Forex open or indices open, 8:30 on the candle, right, on the 8:30. Time element is important if you look at this. On the 8:30 candle here. Made a move down, took out the lows, the liquidity below here. Down into this fair value gap. But if you analyze this here, right, this fair value gaps here are printed as vector candles, PV, SRA, PV, SRA, or vector candles. Yeah, you can get them here, vector candles, or PV, SRA volume, and then they will color the candles like this. And basically what this is, this measures the last 10 candles, and you get blue or green bullish candles if they have more volume than the past 10 candles, right? Green is 200% more, and blue is 150%. On the bearish side, it's red, 200% more volume, or violet, 100%, 150% more volume than the past. You can clearly see, you have this vector which creates the fair value gap, and right after you have another vector which creates another fair value gap, but they overlap right here. Can you see that? Let me zoom in. They overlap right here. So between these two, so first of all, you need 200% of the past 10 candles to print the green vector, right? You need another 200%, this green vector included now, to print a consecutive, a second, back-to-back, and then they overlap, and the most volume you will have here when they overlap, you see the vector candles are marked in my indicator, as zones, as boxes. The full candle is marked, you have the same here too, right? 1, 2, and 3. This one was negated, when body closes below, it gets deleted. But you have this one, and the overlap. This is where the volume sits, the highest volume, in the vector, in this vector zone. And look what price did as an example, right? Before we pushed up yesterday. It gets down, it can't break the highest volume in those vector candles, right? It can't break down. It just collected it up here and pushed up, because what's happening here is it's a sell, and then the power comes to the buy. We drop down, no body closure below, in this area here, in the sideways, price spend the time going up, going down, and up, and then you get this overlap in this 1 minute candles. So it's a nice signature. We have the same here, we tap it, we don't tap the fair value gaps, and then go out. I will explain later why that's so important, you know. So you get this, and you know, we stop here. We don't go down. What price does is inducing people to go long. Price gets down, does the stop hunt, touches right there, you know. Touches right there is a sweet spot. You know what I mean? This is the sweet spot. Price pushes up, gets a body closure above the high of the bearish candle, you know. Pushes up, comes down, respects the area left behind because energy was used, orders was used, you know, to get up, get down, pick up the rest, you know, the left behind orders in here, in this zone, and pushes up again. And my scenario was for this morning, I was thinking about what will happen, you know. I was thinking about a broadening formation, you know. I was thinking about the broadening formation, you know, takes a low, takes a high, takes a low, takes a high, takes a low, takes a high, you know, like a seek and destroy environment. I was expecting that, but also I was expecting, if you watch my videos in the past 2 or 3 days, so everybody was asking why Bitcoin crashed, right? At this time area here, you know, at this time area here, everybody figured it out because it was on all over Twitter or X, you know, Instagram and YouTube. Everybody figured it out, right? So when everybody figures it out and they know why it's crashing, they're expecting the retail thinker, you know, the retail trader thinks, all right, we are crashing this because now we know why, and they think it will keep crash. What does the market maker think? He is watching social media. He's watching, you know, everything. Now everybody knows, and everybody's expecting it's gonna go down. So one of my expectations was, I was talking about that in the last video. I was saying we will get a broadening formation here, you know, to seek and destroy, you know, always stop on. It didn't do that. I said, man, maybe we will get a little bit better prices for an entry, or we will get a real dig move from the market makers, and we did get a real dig move, you know. We just went down here a little bit to get a little bit of liquidity here. They didn't go lower because people are short in here. When they go lower, they get more money, right? So it's limited what they do, you know. They don't want these people to make a lot of money. So it gets lower a little bit, takes out this liquidity. People who trade their stop losses, you know, who was long in here, who didn't take profit, maybe his stop loss was here, and then this morning, sorry, maybe they trade their stop losses in this area, right? And then they take it, charge it up, and they did exactly one of my scenarios, you know. That's what they do. They push the price up super quick. Look at this, you know, just in what, I don't know, 10-20 minutes, pushes up, and now they force people to buy at these expensive price, you know. They force people to buy, those who think it will go higher, you know, at higher prices. That's the intention here. The intention of this move is to make people believe, okay, the dip is in, and then they make they want to make people to believe, all right, the dip is in, we are bullish again, you know. And they force people to buy here higher. But we are leaving. Look at those. This is a big imbalance here. It's market. It's a big imbalance. Look what we are leaving behind, man. Big imbalance. Look at the signature of the price. Big imbalance. You see it, right? It's all green. Now to anticipate price, market maker behavior. What do you think will happen? Look at the moves. Boom. Look at the moves. Boom. Up. Boom. Up. A lot of time on top. A little bit down, you know. And boom, we are up again. Do you think we will push higher? We reached 57. At 57,000, we had a lot of resting orders, and you see here clearly these dots. This indicates we collected a lot of orders right here on this point. We did it here, we did it here, but here was the biggest at 57 exactly, you know, at 57 down. You were seeing this in the order book, you know, resting limit orders. It was full here, you know, and we are respecting again a point of interest here, the red vector candle. Now look at this. They prepped the market and they created liquidity in form of stop losses, right? This is all money down here, guys. This is all money. Wow, that was ugly. But a lot of money is sitting in these areas right now. Liquidations. We still can go. I don't think we will go higher in Asia. Maybe a little bit to mitigate this zone here. We can apply the DTFX logic in this one. So that's a clear break here, right? Make it 50. And look at its previous day's high and the weekly high is sitting at the 50% of this range. Of this break here, you know, of this range. This is a DTFX range, as you can see. We got a low, we got a high. This high breaks this low. You measure the 50% and you will put a straight 50% line on it. So it's possible that we go up, induce more longs, create more liquidity below. And maybe we can see a move. Maybe we can see a move in Asia. You know, I'm gonna take out that shit. And then we can make our move to the real dip. Where is the real dip? I believe the real dip is between 47, 45, or 43 and 42. This move here, which lasts here from Monday to Tuesday, right? Monday, Tuesday, maybe Wednesday, can spend a lot of time here again, you know, it's possible. Get a move up to the 50% of the previous range and then drop, you know, because price is still bearish, it's not bullish. This up move here, this 10% here, you know, and then this, what is this? Let me check the full range here, 16%. This move here, right? This happened only, the reason why this happened is because everybody found out and everybody was thinking it will go down. And what did price do? Just shut up. Everybody who was short, who was thinking short, or thought the better way, right? And we created this liquidity. This is fresh liquidity down here. While we were bleeding down the whole time. I don't think the bottom was in. I believe we will still go down. This was just this is all set up, you know, perfectly set it up. And the fact that it did 16% just from Monday to Tuesday, it just tells me a lot of people were short here. This area was a short area. Most of the people went short here. Take the 1 hour. So this is how I read the markets, you know, how I put the story together. I was talking about at the start of the video of my last video, right? What do you have to learn for trading, right? That market structure is king, is everything and above everything, you know. You have to learn everything about market structure, and you have to watch price live, what it does. You have to understand the system behind it. Multi-time frame. Most of the time I'm operating on the 1 minute. What really helped me to understand and read price, even though I was understanding 1 minute multi-time frame on the 1 minute, how to read it, you know, get the concepts in, you know, fair value gaps and all that chat, order blocks, breaker blocks, you know, mitigation process, why does it mitigate and all that shit. What also really helped me in my development, right? The 1 second chart. I spent it like 3 days, right? Just observing the 1 second chart on one half of my screen and the 1 minute chart. So I can see the 1 second chart without looking at the 1 second chart on the 1 minute. I know what's happening here in the 60 seconds. This one candle is 60 seconds, right? I know what's going on here. You know, I know this is a sideways range. I know then what's going to happen, what it prints on the 1 second chart, you know? And you combine that with you need multiple monitors, you know, to really understand what price, where it does, why it does that, you know, how it collects resting orders, you know. These are all limit orders. They are not in the market. You see this? They're just put in, and price has to go down, and then it has to be filled. You know, it has to get into the market, and you can observe this on the 1 second to the millisecond. I mean, to the second. And I promise you, when you can do that, if you put the work in, right, bro, you can, brother or sister, whatever, bro, you can go into the 1 minute and you can scalp the shit out of the market. You know, you can make money in this move, in this move, in this move, in this move, even in this little move here. You know, you can go long, boom, boom, get your bite. You know, and again, you can go down and take your bite because you understand what's going on, and you can. It just unlocks. You know, I mean, I learned this through 1 year. You know,